Hello everybody and welcome back. Well, it might seem over the last couple of days that this relief rally, it's all good and everything's back to normal. The problem is the bears are sitting at certain zones and I think that we're about to see a big scrap between them. Let's talk about stocks, commodities and crypto levels right now. Heaps to discuss. See you soon. Well, welcome back everybody to the daily show here where we talk about stocks, cryptos and commodities daily. This is for the market close 17th of May 2022 and we'll get started by talking about fear and greed and sentiment in the current markets. As many of you would know, we're still in extreme fear reading, and even though that seems to not be as bad as it was, sentiment is still very negative on markets in general. In fact, we're hitting one of the record lows here in terms of optimism in the US and around the Western world moving forward. Most people don't believe we're in a strong economy, and you can see the reasons why. That brings me to the next question. Are we in a relief rally? That is a rally that is formed before more bearishness occurs. Well, there are some points to this story, and of course we will be looking at those today and talking about some key zones that we see moving forward on the S&P 500, Nasdaq, cryptos and specific stocks and commodities. But it's very normal that every bear bust, that is a recession or any kind of bear market, is usually met by incredible wild swings. You'll notice that often these swings are around that 10, 11, 12%. These are some of the ones that occurred in 2008. If we move over also and understand what happens when the Federal Reserve rate hikes, we generally see a market that is very sideways. That is, the next 3 months tend to be up, down, and all around. It can coin flip after that period. And the next 6 months don't really get much better than that, still posting a lot of bad gains. We're in a midterm election year. This means some other things, and we'll bring more of those things through as we create some extra videos this week. And I'll bring in a new concept each day so you guys can see that. So make sure you subscribe. But effectively, we could be just in a little bit of relief before more pain occurs. Now, we have, of course, been flagging the fact that we believe the rally was going to start last week, and it has. We managed to get that one pretty good, and so far, so good in terms of the daily videos and what we've been discussing. But here we have the movement in the last 24 hours. It looks like really it was risk on, and you can tell, look at this. All of the risk stocks suddenly came out to play, and people were prepared to take some serious movements there. So what happened for the session? Well, it was a bit of a sell-off in the morning. It actually came down to a level that we talked about in our private community during the open session. If you're interested in that, you can check out the links down below. Also join our public Discord down below. It's a great room with plenty of people talking about trades in there as well. And you'll notice that the market pulled off, and what it did was it really just closed some of what it put on during the futures. It kind of went a little bit crazy into the session, and we expected bullishness, but it was a little bit too bullish. So it came down, it then moved forward, and then as Powell came out and had some discussions, the market moved straight back down. It always does this, freaks out when he talks about something, and then we saw a huge spring to close the day on highs. Specifically, it was risk on, as we mentioned. IWM and the Nasdaq out in the lead with some significant percentages. So this meant that certain sectors were doing well. Our travel sector's coming back, at least for now. We'll find out whether that can hold up and actually break through this trend line that we've got set on that. For anyone that's watching the channel for a while, you'll know that I've been looking at that all year and waiting for this one very patiently for the real triggers. Then we've got things like metals, XLK, semiconductors, clean energy, and solar. They were the sectors that did the best for the session. So what about VIX and fear? Is fear coming out of the market? Well, on the surface, yes. I mean, fear is dropping, and that means volatility is technically dropping in these markets. Theoretically, a bull signal. However, there is many other things that we need to consider. What about the puts and the calls? How are they looking? Well, for another day, we were really seeing a pretty much equalization between that. We had similar puts and calls being opened in the market. And what's really occurring here is we're seeing a market which is still very, very heavily sided towards bearish puts sitting around that 400, 380 and 390 SPY, which we'll talk about later in today's video and how that really impacts these markets. The next thing we want to say is, well, what's going on with the US 10-year? Is it rising? Is it falling? What's going on here? Is inflation dropping? Well, we expected the US 10-year to come up to around this 3%. Somewhere around here, we hope it turns around to the negative side. And if it does start to turn around and it breaks under this area over here, which is around 2.75, we can probably fairly accurately guess that potentially the highest point of the 10-year is in for now. And that could be a very big positive towards risk on, and of course, those sectors and stocks that have been suffering due to this. So we'll continue to watch the 10-year as close as possible. Another big dramatic thing that occurred, and we talked about this in the channel in the last couple of videos, was the US dollar. It just dropped. It plummeted underneath one of our very important zones. Now, we do expect a relief rally here for the dollar. So basically what that means is we kind of expect the US dollar to come up a little bit. But I think it's going to have some problems here. Somewhere around that 104 to 104.20 zone, the DXY might fall into some shorting pressure. And if that occurs, now that it's taken out all of this demand, it might be turning over. Now, calling highs on the US dollar is very difficult. The trend is obviously incredibly up here, and you don't really know the daily trend's over until it breaks through this 102.40 area, and that hasn't happened. But the first signs have now started to recover and started to move. We saw the first one on the 1 hour. We've now seen the 4 hour. Do we end up seeing the daily? And this is the end for the DXY for now. If it is, that's a good sign. Of course, that means that money is most likely going into bonds, most likely going into risk on assets, and we can, of course, allocate better for that. The next thing that we want to be looking at is potentially gold. Now, if we believe that the US dollar might be dropping soon, could gold make a resurgence? Well, I've argued here for a little while that gold's starting to get into the hot zone. So it's pretty much looking like it's been declining for a while, which it has. It's changed trend, and it hit a very critical zone that we just saw it bounce off. This is an area that we've been really discussing as demand, and the market liked it initially. Look at this, it created a bullish hammer, and at this stage, it's fighting it out on the current daily. So depending on how it reacts around here, we might be looking at a bottom in here for gold. And I'll continue to follow this on the channel because I think gold could be very, very interesting moving forward if the right things occur. This is a watch zone at this stage. Of course, previous resistance technically becoming support, but I could see gold coming back down to this 1800 and potentially finding bounce off zones here. So watch the 1800. If you're a scalper or a day trader, it could be a very interesting zone for potential buy turnarounds on the smaller time frame. Of course, you need to go in and have a look at your own ideas there. Let's move over to US oil. What's going on there? Well, we've got some resistance. We've got the high, the resistance, and the resistance. Now, OPEC's come out and they said, hey, guys, we're not making any extra barrels. Don't worry about that. Supply will remain constrained. They're trying to milk this for as much as they can get, yeah? And that's not necessarily good for us at the pump, but what it does mean is, at least on the story side, they're claiming that they're going to continue having a lot of barrels coming out. We look at that and we say, well, what's going on here in the markets? And you'll know I'm being a little bit negative here on oil over the last really probably about 2 months. I've said that, okay, I'm seeing the signs that maybe a top's in. We are at a significant resistance, and while I understand we broke through this area, I'm kind of worried about this zone, and I would watch very carefully in here. I would call it neutral on oil at this stage to possibly bearish for me, but the price action still looks bullish. And if you break back through this 116.50, you could be looking at literally oil going back to 127 a barrel. So just remember, massive resistance here. At this stage, I feel like we're at resistance for this one. Let's move over to Tesla. What's going on there? Well, Tesla filled the gap. It then ranged back up, and it's kind of stuck within a bit of a range. We've got that 784 on the top side, with the 725, 700 on the bottom side. And we know that Tesla buyers love purchasing round numbers. So 700 was obviously a very, very big level for it. The next zone I would like to see broken is 783. And I think if that occurs, you'll see some bullish action. But Tesla, it's just got a lot of news around it. As I've been mentioning, you've got to be very careful here while Elon's doing this Twitter thing and whatever's going on with that. That needs to be watched, plus the Shanghai factory stuff, which we now have the news of them reopening and all of these types of things. There's just a lot of news there on Tesla. So I think it's a little bit muddled from a day trading perspective for now. Hopefully we can get some clarity on it soon. Let's move over to Apple. Apple is a little bit more clear. Great level here. We really did pick this as a community together in terms of demand zone support. Fantastic level, long leg doji, nice closure above, nice doji, nice movement. I'm hoping that Apple can come up here and possibly tap that 155 area. It's coming into a big zone, and this was where it previously fell through the floor. this is a zone that I hope Apple can make it back to. So we'll continue to watch that. I'm hoping that's not a hanging man sitting there. And what that means is that if we end up getting a bit of a candle sitting like this out after a gap, and then it goes back down and closes red, yeah, back down we go, back to 140. And that could show us that the signal for the Nasdaq, the signal for the S&P 500 turning around. Not seeing that right yet. It does look mostly strong, but we'll have to keep watching it. Let's move over here to some other things. So we'll start with the DAX. So the DAX looked a bit better here, broke through the downward trend over the last 24 hours. We talked about the consolidation. That was a good day trade if you took the DAX. And we'll just quickly look at the 15-minute time frame here so you can see what I was talking about. Here's the consolidation underneath, effectively creating a little nice level where we had a downward trend. We have equal kind of lows. We have the max pain. Remember, I talk a lot about max pain being formed. That is a fake rally to the downside where the market considers, oh, look, I'm short. No, I'm not really, haha. And it traps people into that position. Now, if we were looking at the higher time frames, we already expected it to probably break through here. And once that occurred, you know, you're getting a very significant rally. And if you had taken that, let's have a look at what the percentage was. I think around here, you could have probably pulled the trigger. Another 1 a bit percent, not bad. Statistically likely kind of pattern. Very, very nice there. And a nice breakout in the DAX. So if the markets are going to go higher, this is pretty good sign. The other thing that we do have is that horizontal resistance. So we're not out of the woodworks yet, but we've seen the first big one. We've obviously had that day trade possibility. And now we look for a close above this. And that will really show us that things are improving here throughout the worldwide markets. And remember, a lot of these markets like this one are actually in technical bear markets for now. So each time it hits these resistances, there is sell pressure. And that's what's coming through at this stage. Let's move over to IWM. As we thought, IWM is recovering quite nicely. Now, before, we've had a lot of ABC kind of swings. Now, if anyone knows Elliott Wave, you'll know these types of things tend to occur. But I like to think of it as markets are moving in some form of uniformity. So we have here the first kind of movement. We've got the second kind of movement. We've got the third kind of movement. Now, I don't count this because that's a false break to the upside. So I scrapped that because that was more of a trap. But you'll notice each time these markets seem to be recovering in very similar fashion. They recover here, they recover here. So is that the recovery we're going to get before the turnaround? Is this all we get relief rally wise? I think it starts to present an interesting point, and I think we're seeing this through a lot of markets. These reliefs would all equal previous roll reversals, which would also equal some key zones on the S&P 500 and Nasdaq. So let's take a look at the Nasdaq now and consider this concept. Let's go here to a daily and let's just quickly think about the movement down, which as we know was very equal. So here's the range here. That's the movement down. Here's the movement again. Our expectation, why we called the bottom. Yeah, okay, we got it right. But in general, the reason we got it right was through a multitude of different reasons. So much correlation. Now, if this market's going to recover back up, we're talking about some serious recovery. But I think before we even talk about that stage, we've got a level here for the bulls and the bears to fight it out. So let's take a look at that on the smaller time frame. You'll notice here the hour. Look at this. Resistance, resistance, resistance. Coincidence level? I don't think so. A big zone here coming up here for the Nasdaq and for the S&P 500 actually. So let's take a look. Somewhere around that 12,800 zone will probably interact with this downward trend. That's not that far away. It's only a few hundred points. And at the time of this recording, I think it's down a little bit red, but not that much. So if we do rally, do we rally into these last swings? Remember, the last swing starts here around 12.9. These levels, I believe, are where bears are going to come or try to get back into this market. Theoretically, this would make a lot of sense because this is a zone where we've got to remember, what's the daily trend? It's still down. Just because a few days of bullish rally have happened doesn't mean that the trend isn't down on certain higher timeframes. So I think when you scroll through here, you come down to something like a 15-minute chart or any of these timeframes, we're starting to build a story for why bears could be sitting here around that 12,750 to 12,850, 12,9 zone. This area here, I think, will be targeted. And for some day traders, they're going to be looking for changes of trend up there, potential chances towards the short, and I think there could be some action. Let's move over to the S&P 500. Does that agree with our general idea? Well, I think we're being, again, pretty accurate here in terms of our general analysis. In the previous video I did for the open, for the private community, if you're interested, again, you can join that. We talked about this level here, 40-40. Now, it looks obvious, of course, in hindsight. I think it was a good day trading level. The main reason is we opened up above, like this, and we gapped. We obviously wanted to fill to this level, and anyone that knows basic support resistance would know that we have resistances and that there's a good chance there's going to be some support around here. That is what occurred for that session, and we ended up seeing that nice rally through the session, and it was a good day, and if you were trading it, fantastic. But let's talk about the future. Let's talk about what we know about this level over here, the 4150. It's a big zone. Supports all over it, tons of orders floating all over it, tons of consolidation floating on it. Here's a volume profile. You can see it. We scroll out more. Again, you just know the 4150 is a big area because it's hit it many times before. And it just came up and tapped the 4110. So you'll notice it's hit this 4100 pretty close to there, right on that little bit of resistance. So that's going to be a miniature supply. I can see why it's trying to short off that zone, but I do think the bigger zone here is around that 4150. So right here is where I think there might be a battle between the bulls and the bears. What do you guys think in the comments down below? Do you agree there's going to be a battle between the bulls and the bears? Can we find some other reasons why we might think that's going to occur? Well, if we grab a line and we think about those last two peaks, do they line up very accurately with that zone? I think they do. And again, it presents an interesting point here. Where are the sellers going to come back in? It makes some sense around here. It doesn't mean it's going to be an aggressive sell, oh, haha, we go all the way down to the bottom. I'm certainly not saying that, but I do think that these are the zones that people pay attention to. And I've got two here. I've got one around that 4300 area, previous resistances. Obviously, we can see that, previous supply. And we've got one around the 4150 that I think are interesting. And we still have a lot of defense at 4040 and around that 3990 on the SPY. So these are all key zones that I look at on the daily, and obviously I'll be paying attention to them. That's why I share them on this channel. Let's now move over to just the general market so you can see it a little bit more cleanly. This is the real market, not including the futures. And again, you'll see where that trend line ends up lining up with, which is very equal to the 4150 kind of area. So again, it could come through, and imagine if you saw something like this on your daily or on your 1 hour, 2 hour chart, and you see like a shooting star coming off this level and then it starts following through. Wouldn't that be a clear sign the bears were coming into play? I think so, and it's why we bring that up on the chart. Let's have a look if it makes sense with the options. So what do we expect before potentially hitting the 4150 if that does occur? Well, we've got some max pain. Here's some interesting things. If max pain is going to come through perfectly right now, if the market wants to make the most amount of money from the options expiration on the 18th of May, they would actually push the market to 402. That's actually a lot lower than where it is currently. But if they wanted to make the bigger amount of money, which is obviously this huge expiration, currently the max pain is sitting around 423. So interestingly, it's dropped a bit since the previous video we've done. That means there's even more potential puts being put into this system, and we're seeing a big movement here towards maybe trying to pressure that market down a little bit. So I think that 423, we might even end up at a 415 potentially for the end of the week, and something that we will be paying attention to. Max pain is not guaranteed. Of course, it never always works or anything like that. Nothing always does. It just gives you a bit of understanding about what the market's trying to do. And what you'll notice is the reason why we were talking about those lows the other day was because there were too many puts at these zones. So there were so many puts that were open. It was unlikely the market wanted to be under 400, yet where was it? It was under 400. So with all of the things combined, that's why you move back forward, to make sure everyone here loses. That's what the market likes doing. Maximum pain to all of us, the retail traders. We get owned, unfortunately. Let's move over to Bitcoin. Bitcoin is in still a demand area, decent support, trying to structure up as best it can. The way I look at Bitcoin right now is there's a little bit of resistance over here around 32,000 that I think a lot of people are discounting. This is very critical. There's something sitting there. And if it busts that level, that's a great sign for recovery for Bitcoin. But it's still too early to tell. It's going to need things like the Nasdaq really recovering way more. And the crypto market's taken a heavy beating here. Everybody's aware of it now. Everyone's feeling a lot less hyped. And remember, crypto requires hype. So while Bitcoin might do all right, other coins could degrade if we don't see Bitcoin move fast. So Bitcoin might just keep sitting here making a series of higher lows. Theoretically, that's good, but we do need to break that 32,000. I think that's a very critical zone here for Bitcoin moving forward for the bulls. BTC shorts, that still continues to decline, which again is good. It basically means that a lot of the shorts are coming out of the market. We're finding a structural base. We're finding some kind of equilibrium. And Ethereum is also finding that similar equilibrium right here. If you haven't already, come and follow us over at FX Evolution on Twitter. Of course, we do share stuff there, so please come and follow us. We've almost got 6,000 followers there. Thanks so much, guys. And just to remember, appreciate each and every one of you. If you enjoyed the video, please subscribe, smash that like button, guys, and we'll see you in the next one for another daily update covering all the markets and the key levels that we need to be looking at. See you soon.